The shift towards equity. Takeaways from 4 years of blockchain-related transactions. By Gil Solomon, Gil Solomon Co.
Happy to be here. So first of all, I'll start by giving thanks. Thank you for attending. Thank you for attending this amazing event. Thank you for being part of this amazing ecosystem. And obviously, thank you to Sigma for orchestrating and organizing such an amazing event, and for having me here. So I'm here on behalf of my law firm to speak to you about cryptocurrency investments and takeaways from 4 years of doing cryptocurrency transactions and blockchain-involved transactions. My firm and myself have been in this space for the last 4 years. We've been representing investors, exchanges, companies, service providers, and other involved parties. And this year has been a very special year for our firm, as this year we have been ranked by Dun & Bradstreet as one of the leading firms in our country, Israel, making me the youngest ever ranked attorney in Israel. So, speaking about blockchain cryptocurrency transactions has to start from somewhere, right? And the grand scale of cryptocurrency and blockchain transactions started in 2017, but before that, we had the beginning, what we call in the beginning. And it started by the first ICO, obviously, or the invention of the Bitcoin prior to that. And the first ICO was in 2013 by Mastercoin. Then in 2014, Ethereum had its token generation event. Ethereum, now the second largest cryptocurrency in terms of market cap, raised in its ICO only $2.3 million. Is it like what? 1,000 Ethereum right now or so? That's amazing. So that what happened before 2017. 2017 and on until the mid of 2018, we had the ICO boom. The ICO boom was characterized by a large-scale investments in tokens and cryptocurrencies of company issuing in high amounts of capital investments. So we saw Kick Software issuing KIN tokens for $150 million. We saw Bancor raising $150 million. We saw Orbs raising $250 million. And then, during 2018, we saw Telegram reaching the Tres Comas Club, Silicon Valley reference, by the way, by issuing cryptocurrencies to the public in an amount of $1.7 billion, followed, and I think it was the only time that any amount beyond 1.7 B was raised, and it was EOS, offering the toll up to after what today is claimed to be a little bit of wash trading for almost $4.5 billion. Now, in light of all these offerings and a little bit of what we call scam offerings and offerings that didn't live up to the hype that the white paper provided for or the websites provided for, regulators got into the market and started to scrutinize everything. And then we saw a little bit of retreat from the market by companies and issuers. Most of them were legitimate. So, has crypto really changed the way we do business? The answer is categorically no, in my opinion. All, or almost all, of the major investments and major issuances of cryptocurrency involved a pre-sale stage. All these pre-sale stages involved individuals, high net worth individuals, and funds, and other accredited investors doing business the old-fashioned way, with us lawyers involved, which meant, correctly, paper agreements, the old-fashioned way. So crypto didn't have anything to contribute to the market at the time of the investment contemplation and the investment consummation. The need for traditional clauses like indemnification, escrow, legal opinion still existed with these kind of investors, which meant that there is no real addition. And then we had STOs. STOs were scrutinized and regulated like any other security offering, or were meant to be, at least. So this led to the end of ICOs as we know them, at least in the grand scale we had in 2017, 2018. The ICO boom faded, and then there was a period of an increase in equity investments in all sorts of cryptocurrency and blockchain-involved enterprises. Sequoia got into the market, Andreessen Horowitz, Draper Capital, and others, investing in total of billions only during 2018. So following the burst of the bubble, when this bubble burst, started a phase that we call the crypto winter. And the crypto winter was basically symbolizing the decline of the market up to a total market cap of $110 billion. And it recovered only by mid-2019 when it's reached $270 billion. Then we also noticed about that time, during mid-2019, a world trend of regulatory and legislative improvement, where companies tested the waters involving cryptocurrency. We saw sandboxes and we saw legislative initiations in all sorts of European countries like the UK, France, Germany, Switzerland, Malta, obviously. Malta, by the way, jumped the gun before everyone else, and I think that the Digital Asset Act was actually got into effect late 2018. So the market moved from the performance of ICOs to a more mature mechanism like IEOs and STOs. And during that time, we also saw that the SEC, the American regulators, Securities Exchange Commission, starting to scrutinize and pursue crypto companies, bringing them to court, like Kik and Telegram, for example. And then we noticed a brave new world, 2020, which involved a few phenomena now everybody can see, such as the rise of DeFi, the rise of NFTs, and the rise of decentralized exchanges. Now, decentralized exchanges is something that is worth delaying about because, and speaking a little bit further, because decentralized exchanges, while providing ease of use and ease of offering and issuance of cryptocurrencies, entail major regulatory risks. For example, when we used to do IEOs, initial exchange offering, an exchange would vet the company. Even in an ICO, once you want to list the token in an exchange, the exchange would vet the company, seeing that it's legit. Right now, when I'm issuing through a decentralized exchange, there's no one vetting the company. No real person, anyway. So this poses a risk from the side of the investor, but it's a peer-to-peer transaction. It's also involves a risk from the side of the company, because I don't know who I'm selling my tokens to. It can be a terrorist, it can be a drug dealer, it can be a sanctioned country even. It's a major regulatory risk, and we need to know it. We need to notice it when working. We also saw large-scale blockchain enterprises go public and do large-scale transactions, such as Coinbase, issuing on NASDAQ. We saw crypto exchanges that involve regulatory oversight gaining the status of a true exchange, like any other market, like the NASDAQ and like others. We saw Symmetria getting this kind of license in Israel. We saw INX getting the same kind of license in the US. And we saw in Salvador adopting Bitcoin as a legal tender, a trend which I'm sure will be again in other countries. Now, the shift has happened. The shift has happened because most investors wanted more security and are there for the long term. most investments today were made by corporate investors wanting to be in there for long term and engaging in crypto as an investment for long term and not on a day trading method. And we saw the rise of mechanisms like ETFs. ETFs that are traded in public markets involving exposure to Bitcoin. Now, what are the main takeaways? And I'll delay about it for one more minute. And this is the most important thing for anyone that contemplates trading. Be mindful of the risks associated with cryptocurrency trading and know these kind of assets. Now, this is the only point in my presentation that's in capital letters, and there's a reason for it. Be mindful of your investment, and more importantly, diversify your investments. Investments diversification is a must. While investing in a new product, you need to be mindful of it and have it run through a code review. You have to make a code review. Any DeFi protocol today has to go through a code review. Any token issued has to go through a code review. And if you look at rug pull phenomena, look it up on Google, any rug pull attack could have been avoided, or most of them could have been avoided by doing a thorough code review. Keep in mind that the risks associated and be mindful of the volatility. Thank you for attending this summit. Thank you for attending my talk. Goodbye.